Commodities don't wait for headlines. They move before the crowd even blinks. Welcome to Weekly Commodities with Investing Angles, where every candle speaks, every Elliott Wave whispers, and we record the turns before they hit the news cycle. This week's edition is packed with signals. Gold. Candles are talking. Is it another leg up or a trap before the fall? Oil. Signs of bottoming? Or still too early to call? Natural gas. Textbook waves. Smooth sailing. Maybe too smooth. Wheat. Will the price of bread drop? Or is volatility rising again? Uranium. Extended coverage this week featuring URA, Quad U, and CCJ. Some names are heating up. Let's dive in and chart the moves, while most are still reacting. But before we dive in, a quick announcement. After testing the late release of our daily videos, we saw its slow discovery and limited reach to new users. So starting now, all market waves, daily and weekly, will be fully public again, published the same day. The scope of these free videos will be more focused. If you want the full breadth of technical charts, Elliott Waves, and setups, you'll find them at our website investingangles.com. We are also phasing out YouTube memberships. To our early supporters, thank you. You will receive a special note on the members channel with a personal offer as a token of appreciation. Thanks again for supporting this evolution. It helps us keep growing and keep forecasting ahead of the crowd. And now let's move on to gold. What we are seeing here, quite a different candles on multiple charts. If we look at the daily frame, for example, we're seeing a fairly firm confirmation of a daily reversal and posing candle on Friday. So chances that the next move would be lower are fairly high. But if we look at the 3-day frame, we can see a dark cloud cover or a harami on some charts. There is a chance for a continued move that gold might start building its bearish momentum. And we would need to see a strong confirmation, which might come in the next 3, 6, or even 9 days. But if we look at the weekly frame, we are seeing after incomplete bearish reversal, we are seeing a bullish candle. This is a bullish engulfing with the chances to move higher. However, a very large upper shadow raises a couple of questions. So the chances that we need to see a confirmation here, confirmation there, and on the daily frame are quite high. So I think that considering all input, gold is potentially forming a triple top. Is trying to form a triple top here. However, we need to have confirmation. So at this point, from the candles perspective, gold is neutral. If we look at the Elliott Waves at this point, there is no clarity either. So this wave downward failed to form as a clean impulse. Well, the best case scenario, it could be a diagonal. And we don't trust diagonals too much, especially in the middle of the waves. Well, that's and the green pass is still alive. However, if it moves a little lower below this level, I would say that the green pass would be invalidated here, and we would be looking for something else. There is also a chance for a blue path, for extended wave here, or wave 3 if it continues sharply downward. So that the wave downward, the very first wave downward, was not also very decisive. It could be in 1, 2, 3, 4, 5 with a triangle in the middle, or it could be just an ABC looking for another wave C and potential reversal and a move to all-time highs. Well, and technically this this situation when we have so many potentially open paths is just reflects the message from the candles. Candles are not decided either. Now let's have a look at technicals. They are more interesting than one would think. And last week we discussed a very significant move. So gold formed a MACD bearish cross of a record magnitude, and technically it surpassed the high of the MACD bearish cross that was last seen in 1980s and 45 years ago. Yes, right. And now we are seeing it continues to move down. And if you look at a slightly bigger frame, we can see on the 2-day frame the cross is also happening. Although we need to wait until the end of Monday to see whether it's recorded or not. And if this momentum starts moving and we can see an even bigger crosses, then we start estimating it with our statistical analysis. Well, that's the perspective, so we keep an eye on this. And the final chart I'd like to about gold is the GOD trust. The closure of the week was neutral, so we don't see a very strong candle here, continuation candle on the daily frame. If we look at the 2-day frame, it's also not decisive. And the weekly candle is clearly neutral. So I identified earlier that we need to see a closure above this line or below this line in order to set a direction. So far, gold decided to stay in the middle, and it might trigger another consolidating phase, maybe horizontal move for a couple of more weeks. That's all about gold. Now let's move on to oil. By the way, if you're interested in silver, we are going to be discussing it in our weekly report on our website investingangles.com. So now let's talk about oil. Oil potentially is forming a bottom. However, we need to be very careful here. So if we look at the daily is technically confirmed the bottom. Now we need to see a bigger candles moving upward. The weekly closure was interesting, so it closed just a few basis points above the necessary line, and now this candle is considered as a bullish one. Below it would be bearish, but above it's bullish, and it's called a piercing line. If it is confirmed next week, we would be looking for a bigger bottom. However, if we look at the larger frame, which closed this week, the 10-day frame, so far this formation is bearish. We see that oil tried to form a bottom here. However, it was rejected right immediately. And now the next candle could be green, and I would expect it might even go towards 64, 65 area before rejection and moving lower. So it would technically align with the weekly potential. Let's see what happens next week. So far on the short term, oil looks bullish, but longer term are firmly bearish. And this is another proof that oil is not feeling really well. So this is a 3 months chart, quarterly chart for oil futures, and we can see that it marginally formed an 8x20 EMA bearish cross here, which is a fairly rare event. I think it happened only 3 or 4 times before, and each time it led to very significant losses. So far, oil is 53% of the top, which we, by the way, called in the middle of 2022, but that's a different story. So far, if Q2 completes in June with this cross, I would be very cautious and very concerning about the potential path. So oil might drop lower or even much lower. So now let's have a look at the Elliott Waves. This is the short-term perspective. So far, two paths remain on the table. One is the red one. It's technically this red one is already invalidated by the move, so I would need to remove this one because of the overlap, and now it leaves only the blue one at this point. So the red one is still possible as an ending diagonal with something like this, but the blue one has much better perspective at this moment. And if it terminates here in the blue rectangle, we would be looking for another wave downward. Well, that's the perspective for oil. And the final chart in the oil segment, I'd like to talk about Exxon, Chevron, and ConocoPhillips. So these are 8-day frames, 8-day candles, which closed on Friday. And I'd like to say that it was a chance for Exxon to get a rally going. However, the candle clearly tells us that not so fast. The chances of a continued decline are higher at this moment, especially after these big red candles that we see for all three companies. And the same situation for Chevron. Most likely this is triple consolidation here with a chance to move lower. And Conoco is very much aligned. So this is a clean bearish harami with a good chances to see confirmation in the next couple of weeks and further move down. Now let's talk about natural gas. Candles are perfectly bullish. So natural gas was able to overcome this potentially bearish spinning top and clearly says that it is looking for higher prices. So natural gas is not oversold at this moment. Oh, not overbought, and we are looking for higher prices on the daily frame. The weekly technically confirmed a reversal here on the this is the bottom, and we can see a closure above the 200 weeks moving average, which is a significant event. Technically, we are looking for higher prices here, and this is a 10-day frame, which is closing on Monday. If it closes with the green candle like this would be a very strong reversal, bullish engulfing on the 10-day frame, which is 2 times more important than the weekly one. Now let's have a look at the Elliott Waves. This is the chart that we've been tracking for a while, since April 20th, when we said this is going to be an ending diagonal with a reaction upward. So this is exactly what happened. Natural gas pushed a little lower, and now it looks like it's going almost vertical, which indirectly confirms our hypothesis about ending diagonal. So this would be the target, the immediate target, and the next target we will be discussing in our weekly reports with our subscribers at investingangles.com. Well, that's all I wanted to say about natural gas. Now let's move on to the next chapter, and this is wheat. But before we move there, I'd like to say that if you found value on how we track the turns before the crowd catches on, this is the time to subscribe. We are building a community of traders who rely on deep technical analysis and not headlines. If you are one of the returning viewers, thank you. You already know the value of staying ahead. Let's make that official. Hit subscribe. Now let's talk about wheat. Wheat candles are deeply concerning, especially after the first week of May. What I'm seeing here is that the daily is clearly bearish. The same on the weekly frame, very strong bearish continuation candle, and wheat, if nothing happened, if no strong super rally on Monday, wheat is going to close its 15-day frame with very strong continuation, bearish continuation candle. And I'd like to emphasize that wheat is not oversold at all. And the monthly frame, monthly closure was technically bearish continuation, not very strong, but nevertheless bearish. And I'd like to emphasize that all charts that you are seeing right now show bearish trends. Speaking about the long-term projection for wheat, this is one of my favorite charts, which was made back in August 2022, when I said that wheat is going to hit this target, ideally this 530 in July 2024. And if you followed us in July 2024, you knew that this is exactly what happened. In July 2024, wheat hit 514, which is very close to 530 that we outlined before. And right now, we are seeing better chances for moving lower to 530 to 435 area, and the wheat is already there. Well, now let's have a look at the shorter term. This is the flag that we discussed with our members earlier in March. So far, wheat, after bouncing up and down, looks like it is taking the direction right now towards these targets that we outlined. So far, no changes in this forecast. Wheat remains bearish until we see a very strong reversal of any sort. Well, now let's move on to uranium. This is going to be an extended session today. And before we start, I'd like to say, if you're finding value in these videos and want full access to our written market coverage, Elliott Waves, technical setups, and macro updates across all major assets, check out the ultimate package on our website. It's like having your own financial newspaper, but focused and noise-free. For new members, reach out to us at help@investingangles.com, tell us your country, and we'll tailor a discounted offer for you. Now let's talk about uranium. And I'll start with URA, the Global Uranium ETF. I'm seeing a very strong, extremely strong move upward. The daily frame is already bullish, and also we are seeing 2 days and 3 days are moving higher. And while we can see a pullback, a little pullback here, just to normalize some technicals, the bigger frames are showing definite signs of strong rallies. So the weekly formed 3 white soldiers right here. But if we zoom out and we look at the 8-day frame, we can see 3 white soldiers also on an 8-day frame. And the technicals would be greatly supporting a continued move higher. Although I would be very careful, because we might see a little pullback for a couple of days or so. Now let's have a look at the chart. So this is the chart that I discussed with our members back in December 2023, saying that this wave has been corrective, and we are looking for an ABC correction, bigger correction, and the chances for uranium to return towards 20 to 16 target are fairly high. And well, that's the chart, the same chart right now. So we were seeing that the target technically was hit just a few weeks ago, 17 to 20, and now I would be looking for a move higher. I'm going to do a special update for uranium on the website. If you're interested in short mid and long-term targets for this potential move, feel free to join us as a member. Well, now let's move on to another chart that we are tracking. It's Quad U energy fuels. So while URA is very impressive, I wouldn't say so about this particular stock or ETF. So what I'm seeing here is the potential reversal, only potential, because it's not confirmed yet. So on the 3-day frame, we would be looking for a breakout, potential breakout. The candle is not confirmed yet, but the previous one was very strong, and we are looking for the trend flipping bullish. The weekly frame is still neutral. Perhaps we might see another move down before it rallies. The only and very strong bullish candle here is the monthly. It closed April with a strong bullish engulfing. And even if we see some consolidation for maybe for a month or even longer, the chances that energy fuels will go higher are fairly significant. And if we look at the Elliott Wave frame, so this is the chart that we discussed earlier. Potentially we had an impulse here, and now I can see an extended wave 2. Potentially would be wave, maybe something like this, wave A, B, and maybe wave C before it starts. So this would align with the candles messages with some technicals. So far, this move is not very impulsive towards the top, but it's not a strong impulsive for the downward either. So most likely it's going to be a consolidation for another several days or weeks. Let's see how it develops. And speaking about the long-term perspective, this is what we discussed earlier. I'm viewing the potential move here towards the target that we discussed way back in December 2023. So the targets were hit precisely, rectangle right in the middle, and now we're looking for potential impulse here. If this was indeed an ending diagonal, expanding ending diagonal, then the next target would be $9. And yeah, that's all I wanted to say at this point for this particular ticker. And the final one is the CCJ. I'm not showing the charts today, but nevertheless, the candles readings are fairly clean. For this one, we have a daily moving higher. This is clearly a bullish trend. Potentially 3 white soldiers on the weekly frame, a very strong, potentially very strong closure on Tuesday. This is the target for those who are trading CCJ. If Conoco Corporation closes above 48.81 on Tuesday, it will form a very, very strong tower bottom with a very good chances to continue higher. So perhaps it's a start of a new trend. And on the monthly frame, this would be a very exciting move as well, especially if it closes May with a green candle. It would be a confirmation of a reversal on the monthly frame. So that's the perspective for uranium. And now it's time to wrap it up. If you're still watching, you already know commodities move with precision, and those who listen to the candles move ahead of the crowd. Gold. Momentum is building, but the setup is fragile. One clean break and the story changes. Oil, trying to carve a bottom, but confirmation is everything. Both needs more for a bounce and more for a ride to continue. Natural gas, beautiful structure, but natural gas rarely stays calm. Watch for the break. Wheat, a technical fork in the road, breakdown or reversal. Candles will call it. We are watching. Uranium. All candles are telling different stories. Some may lead to next move, others might stall. If URA and CCJ are clearly bullish, that quad U might not be as much, but we'll see. The reversal is everything. This is what we do at Investing Angles. We read signals before the noise starts. Subscribe to all. Subscribe to be notified of our daily market waves and weekly digests, right when it matters. Drop your ticker requests in the comments or join us in Discord. Master Trader Kyle is already watching the next setups unfold. Share this video in your trading circles. Reddit, Discord, Facebook, X, wherever sharp minds gather. Like the video if it sharpened your edge. At Investing Angles, we don't follow. We forecast before the crowd even blinks. See you in the next one.